Oh, the situation is heating up, and I want to bring you what you need to know. The first thing we are looking at is the biggest threat to both the financial system as well as society in general, according to legendary investor Paul Tudor Jones. The second thing is the inflation magnification. It continues to rise. Of course, you're seeing prices all over the place, and I want to bring you the details of why that's going on. And the third thing is the multi-layer issues that are taking place, because one adds on top of another, and it only exacerbates the existing problems we already have. So much more to cover than that. Let's go. Paul Tudor Jones says that inflation could be worse than feared. It's the biggest threat to the markets and society. All right, look, he said this. This is a quote. "I think to me the number one issue facing Main Street investors is inflation. And it's pretty clear to me that inflation is not transitory. It's probably the single biggest threat to certainly the financial markets, and I think to society in general. Why? Because the prices are going out of control. We are only in the beginning stages of this." That's what he's trying to say. And based on what I've shown you, it looks like that is the case. And you can see here, inflation can be much worse than we fear. We have the demand side of the equation, and that is $3.5 trillion greater than what it normally would have, just sitting in liquid deposits. They can go into stocks, crypto, real estate, or be consumed. So that's a huge amount of dry powder just sitting, waiting to be utilized at some point, which is why inflation is not going away. Okay, this is huge, okay? It's not just because it's Paul Tudor Jones, but because of what he's pointing to. You don't want to own fixed income. He's talking about bonds. He's saying that is just nonsense today. You don't want to hold that whatsoever, because what they're saying, what they're telling you by their actions is that they are going to be slow and late to fight inflation, and somewhere down the road, somebody will have to come in and put the hammer down. Now that is big, okay? This is exactly what I have been outlining on the channel over the last while. Paul Tudor Jones says, go all in on the inflation trade if the Fed keeps ignoring higher prices. Look at what he said there. If they keep ignoring, and quote, "I will probably buy commodities, buy gold, buy crypto. If they course correct, then you're going to get a taper tantrum." All of this is so important and really summarizes that which we've been discussing and which we'll get into more today. He also says that crypto is his preferred inflation hedge over gold right now. Clearly, there's a place for crypto. Clearly, it's winning the race against gold at the moment. I've got crypto in the single digits in my portfolio. For you as an individual, how much of a percentage do you think is the right amount for crypto? Is it 0? Is it single digits? Is it 100%? Let me know. Let us all know. Let's talk about it in the comment section below. This is something big because it's something that didn't exist before the financial crisis, and now here, multi-trillion-dollar market cap. Inflation could be much worse than feared, according to Paul Tudor Jones. This is the actual interview or clip of it anyway. If you are interested, the link is in the description under the sources as always. And now for a little bit of humor, because you know I like to talk about the funny things that go on. Cramer says, stop freaking out about inflation and buy these companies that benefit from it. And in a sense, I understand what he's saying, but look at the way Paul Tudor Jones talked about it. He said specifically for society in general. He's not necessarily just focused on the financial markets, unlike what Cramer's saying. Yeah, I'll get a little bit of inflation. Oh, don't worry about it if your food costs an extra 50 cents. You know what? It's not like that at all. But of course, Jim Cramer has a different, his situation's a little different, let's say, because he can't say anything negative. Yeah, by the way, this is Jim Cramer. Quote, yeah, I mean, look, I think Paul Tudor Jones, as always, is right about inflation. It's much worse than we thought. I keep hoping that the capacity will come on and make it so it's not as bad, but it just can't seem to come on fast enough. And he refers to a particular company and so on. This is what we're talking about. That's the reality coming through just a little bit. And that's why we have to be smart. We got to be ahead of this. We'll talk about that more in a second. Inflation is approaching a tipping point at the grocery store. Once supermarket prices rise more than 5%, consumer buying habits may start to change. If you think that prices have risen in general in your life more than 5%, if that's the case, hit that thumbs up button, okay? I do appreciate it. In fact, if you think they've gotten lower than 5%, hit the thumbs down button. Do it. Let's do it. Let's see how it goes. Record out of stocks, shipping delays expected this holiday season. And you got to see every new level that is appearing here, which we'll get into more later on, but this cannot be sustained for the average person. They're working their 9 to 5. They're trying to make ends meet. And yet, one factor after another adding up, putting pressure on them. What's going to happen if the new iPhone is not in stock? Not a big deal. But when you've got other things, necessities that suddenly they can't find, or they're driving to 3 stores, wasting time, wasting gas, trying to get what they need, it's going to create problems. Let's break it down in the Money GPS Insights. Okay, right now it is very clear that inflation is both persistent and pervasive. Everywhere you look, it seems to be there. At this time, the Federal Reserve is refusing to admit that this, in fact, is a problem. They're not going to counteract it, and they're calling it transitory. The best course of action right now, today, is to hedge against inflation. Don't delay. There are many ways to do this. People believe that, buying gold is an inflation hedge. Others say real estate. One of the most important factors is to simply buy what you need today to lock in today's prices. I've been talking about this issue for some time, and now I'm noticing it in the articles. Panic ordering by retailers is making the supply chain crisis even worse. Why? They are over-ordering because of the supply chain issues, and that's just leading to essentially an even worse scenario. This is something that I was thinking about many, many months ago, that probably what we have here is companies that are actually ordering what they would need, let's say 3 months or 6 months down the road, and simply pulling that demand into the present, creating not an artificial demand, but essentially just pulling it forward. And while that might be smart business sense, what does it say about the current system that we have? That this just in time is more like just kind of broken, if you ask me. If you agree, let me know. Hit that thumbs up button. Caribou Coffee prepares for the worst and stocks up on supplies. So in this image right here, which for some strange reason has a photoshopped cup of coffee in I think he's the CEO, but right in his hand, if you notice that it's kind of strange to me, it stuck out. Essentially saying that we are increasing safety stock on key items. Cups, lids, chocolate, coffee are the things that come to mind that we've increased the safety stock on. So they are going out there and specifically, in conjunction with what I just covered, ordering more than what they would. And this is smart business sense because they don't want to run out. But it just shows you how critical this situation really is today. Supply chain crisis not seen since the 1940s, when there were submarines sinking. Commercial traders will bring retail disaster for Christmas. Resellers jack up toy costs by as much as 400% as goods fly off the shelves and freight remains stranded. So I just covered, I believe, yesterday's video or the day before, where you had the tractor trailers putting those trailers in the middle, like the containers are being left on Anaheim Street, that's nearby LA Long Beach Port. If you haven't seen that video yet, I will link to it at the end of this one, okay? Think about what that means, that physically they don't have the space to put this stuff. Some people are arguing that it's because of the crane operators are too slow. Others say it's a driver shortage, and some say it's completely contrived. I don't know exactly what's going on, but I can report on the details, and we could see that this just has not happened before. We don't know how to deal with it clearly, and the problems only seem to get worse. But you as an individual, I think you got to be smart about this. I think you need to take action immediately. The sooner, the better. Farm equipment is scarce and pricey. The John Deere strike has farmers worried. Farmers say they sympathize with the desire for better wages, but they face equipment and parts shortages. A long strike could affect the food supply chain and their bottom lines. And the most important part of that, of course, is the food supply chain. Already dealing with the problem. Already prices have risen. And then you add something on top of that. The world does not need that right now. Things need to get resolved. We need resolution. We need some sort of, problem fix at this time. Something needs to be fixed here. Conclusion to this. At least a step in the right direction. First, containers, then dry bulk, and now LNG shipping rates are spiking. Low inventories across the globe translate into ocean shipping windfall. So natural gas, huge. The demand is clearly there. I have shown you the inventories, the stockpiles. I've shown you what has happened with the production, and it's just a big mess. The supply and demand fundamentals are way off today. Natural gas being one of those. I don't remember a time with when so many extreme events were happening in shipping. And you just look at what he says here, the prices that they're going through and so on. It doesn't matter which category. All of them are up. All of them are just extreme in every single example. I look at this data and I think, how much worse can it get? And then the next day I open up the news and it's worse. This is why I tell people that we can't rely on the system as a whole. We rely on it basically for everything, the vast majority of people. But if we start to take those steps today, hopefully we can reduce our dependence ultimately. Maybe we can't get completely off, but if we could reduce it significantly, first of all, we're going to do our part, but at the same time, we're going to be more prepared. Wanted 80,000 truck drivers to help fix the supply chain. That's the level that we're at today. And I think if somebody's a truck driver, they should demand a high salary. Just keep pushing, just keep applying. If you've got the skill, if you've got the experience, I think right now, you just got to keep applying places and just put a real high number. Somebody's going to pay it. Take a look. This is the average person. So they're dealing with extremely high prices in every category. You know that. But what does the average person make? Well, the median wage, by definition, look at this. This is, by the way, this is directly from the SSA website. Okay, so we're getting this directly from the source. By definition, 50% of wage earners had a net compensation less than or equal to the median wage, which is estimated to be $34,600. So this is the median salary, $34,000. How are they ever going to afford the price increases that are already in place today? So I started this video off talking about Paul Tudor Jones, legendary investor. And I wanted to finish off with this to come full circle. This is talking about Weidman, okay? And essentially, we're talking about the Bundesbank chief. He quits, but he gives one last inflation warning. So if I forward down here, essentially, after all of this nonsense about we got so much deflation, this is not something that we need to be thinking about with inflation because we got all this deflation and so on. And if I could find it in here, essentially what we're looking at is him saying right there, even as he announced his departure, he said this, warning of inflation. It will be crucial not to look one-sidedly at deflationary risks, but not to lose sight of prospective inflationary dangers either. And that right there is how I want to finish off this video, okay? It's so important. It's so key. If you want these videos to come up in your search, in your homepage, on your notifications, number one, hit that thumbs up button. That's the easiest thing you can do. Also, If you were to subscribe to the channel and hit that little bell, this is going to help out big time. It's going to help you out. It's going to help me out. That's what all for this video. If you haven't seen this one, you've got to check it out. I've got so much detail. I'm going crazy with the amount of detail I'm putting into these videos. So click it and I'll see you there.